Good evening, everybody. Welcome to the Sunday night strategy session for the week of February 22nd, 2016. Nice to see everybody. We have a nice surge in signups for this week, although, as usual, we don't get a lot of live people, but they tend to trickle in because they know that I spend the first couple of minutes BSing. So they usually come in a little bit later, but glad to see. Please tell everybody that you know about the Sunday night sessions and tell them to sign up at paulandsaul.com. Also, if you have not liked the Facebook page, facebook.com/Paul and Saul. Okay, I am posting a lot of articles up there from various sources, Bloomberg and Market Watch and CNBC and occasionally TheStreet.com, but I usually don't read them as much as the other three. So I'm not saying you're going to be kept up to date on stuff because I'm not posting breaking stuff, but some interesting stories. I tend to read a lot. I'm getting a little bit faster at my reading, not really as fast as I would like it, of course. I'm still painfully slow. Yeah, I will try my best to post this up at YouTube. Last week, I don't know what happened, but having a lot of problems with my computer. I have to get it either looked at or replaced. And then today, it's funny because we use a service to host our Inner Circle video, and this had nothing to do with my computer, but the service was hiccuping today. So what a pain! And it's had nothing to do with my computer though. So that I get a pass on. All right, I was really ticked off, but that I get a pass on. That's not my fault. The idiocy where the recorder doesn't work or because I'm loading up my stupid computer with all crap, that's on me. I'll take that responsibility, but I'm not taking responsibility. It's like if GoToWebinar, what we're on here, would all of a sudden just break down. That's not my fault. Knock wood. That's not my fault, right? But and today we use a service for the Inner Circle, and it's like today, nah, I decided I don't want to work today, so whatever. Just ridiculous. So I had to scramble around and get a backdoor link for it. It's just a pain in the neck. It's just ridiculous. All right, let's look at what's coming up. Nothing on Monday except in Europe. 10 a.m. on Tuesday, consumer confidence, existing home sales. If you're a day trader especially, you want to pay attention to the ones that are going on, to the releases that are going on during the day. 10:30 is crude oil inventories on Wednesday. At 8:30 on Thursday, you got core durable goods, unemployment claims, and durable goods. That's pre-market. And then Friday, you got a bunch of pre-market. Then 10 a.m., you have wow! Did you see that? My tongue almost came through my lip there. We have revised University of Michigan consumer sentiment. Wow, did you see that one? That was brutal. So there are some numbers that you want to look for if you are day trading. Um, and I guess if you don't care and you're just putting on stuff for day swings where you're entering at one part of the day and exiting at the other, that's fine. But if you're a day trader and of course, I hold that dear to my heart. You're trading the futures or looking to make quick gains in the scalp area, then you really always want to watch when those releases are coming up. So as far as the market is concerned, I'm going to get an error here. So hang on 1 second. Sorry about that. So as far as the market is concerned, futures are up. Looks like, yeah, they're up a couple points, not much. All right. We have a potential double bottom in place. My opinion, and I talked about this in the Inner Circle Mastermind as to why, is I do not believe that the lows are in, but I also don't believe that it's just, okay, let's just lay back and lay up some shorts here and watch us come back down to the lows. Don't know if we're ready to do that yet. I do feel that the third option that is often ignored is a sideways consolidation can be forming here. And remember, there was a concept from Richard Wyckoff, one of the classic technical analysts back in the day, and he said that price equals time. And after big price moves, oftentimes it will take a lot of time to make up the market to make up its mind and decide the next move that's going to happen. Now, of course, the market doesn't exist without the traders, the investors, whatever it is, making the market up. So when I say when the market has to make its mind up, it's really the participants in the market deciding to, okay, let's put some more money to work or take some more money out, whatever it is. Because contrary to what a lot of people think about the market is uh, the market goes down because people are not supporting buying it. Yeah, there are shorts. Yeah, people put shorts. I'm not saying that doesn't exist. Okay, but most of it is from people failing to continue to support the market. The market has to continually be bought in order for us to continue to go up. And of course, with what's going on in the presidential primaries and really some uncertainty on who's going to win, I still think there's no way Trump gets the nomination, and I don't think Trump wins even if he does, but that's my opinion. It has nothing to do with my political views, believe me. I just think he's too out there for people to really get a big supportive reaction. I don't know, Paul. What do you think of that? You're a politically motivated guy. What do you think? You think Trump gets the nod?
I mean, I I was surprised at how much the vote he got yesterday. So with each passing primary, it's going to become more and more likely. I didn't predict it yet, but my guess is it's probably it'll probably come down to Trump and Rubio, and the establishment will throw all their support for Rubio. But in the end, it may not be enough.
Wow.
I mean, Bernie's got no shot. I mean, which is so funny. The media spins it like he's a real competitor, but the way the superdelegates go on the Democratic side, he has no shot. He has to win in a landslide, or else it's fixed for Hillary. So it's almost like they should just give up and move on.
Wow. Wow.
But I also don't think the market gives a rat's rear end about the election right now.
I think the uncertainty is a problem, but I don't know.
Not in February.
Really.
If it was October, I'd agree, but February, so many things can happen between now and October. Forget about November. I don't think so. Maybe it's a distraction, but not going to affect earnings anytime soon. And even if Trump or Sanders wins, it's not going to impact the economy anytime soon. And then they have to deal with Congress.
Right, but I don't look. I don't think that somebody wins and all of a sudden all heck breaks loose. I think it's the perception of, oh boy, now we got this guy in office or this girl in office or woman in office. Sorry. So I don't, that's what I think is the real question. I don't, but
I don't think it's just now though. I think that's a down the road story. I mean, look, the markets didn't care about the election certainly in '08 when Hillary went from being the lock president to being swamped by the current guy. And given that it's now February, I don't think the markets really care right now. My water bill. I think it's more, media fodder. I mean, look, the media loves that we're spending $1 billion in the campaign.
all right.
And I think that's one of the reasons why they keep Bernie in the limelight is because it keeps people interested more. But if you go through it in detail, Harry Reid's a super delegate. You got so many party politicians who are super delegates I mean, Bernie would literally have to win in a landslide to be considered for the nomination, and I don't think anybody believes that. Maybe I could be wrong, but I don't think so.
All right, it's all yours.
But I'll tell you what's funny. In the lift line on yesterday, I was talking to some friends who are involved in Connecticut politics on the GOP side, and I didn't even know they liked Trump because I called him a lunatic, and they got all mad. But I said, the only way Trump can even compete is if he goes against Bernie. And the only way Bernie can compete is if he swamps Hillary. And so these 4 college kids in front of us turned around and started to engage in I'll say a nice discussion. It wasn't. They're like, F you, blah, blah, blah. Bernie's the man. He can't lose. Can change the country. I'm like, change the country? For what? Sweden? Denmark? I'm not going to mention Russia or China. I mean, no one lives in this country to emulate the Scandinavian countries. I mean, where their low to high salaries are in this tight range. We don't live. If you like that, that's great. More power to you. Go live in Scandinavia. But I think it's just so funny how the kind of the misguided youths think that by giving everyone free health care and free tuition, you might as well give everybody free food and free cars too. That will somehow create a better economy.
I'll take a free car.
Yeah, great.
You don't want a free car?
You know as well as I do that the minute you start offering free stuff, the motivation to produce goes down. Before you know it, you do nothing, and you end up like some North Korea or Russian economy. Although that's really an exaggeration. All right. You know what? Give me 1 second. I forgot my water in the other room. Hold on a second.
All right. Anyway.
All right. I'm here.
All right. I'll talk to you. Call me after you're done.
All right. Okay, let's start. Let's see. So we came into a little bit here in the last 10 minutes. Last week we came in and my thinking was we put in a bottom. I didn't love the structure of the bottom, as you know, and I've written about it. But nonetheless, it was a good short-term bottom. The question was, is it just a reflex rally, meaning we can retrace 50%-ish, or is it a real low? There's a lot of things I didn't like about the bottom, but it was one where I said I went all in and bought. Nothing's really changed. The only exception would be that you had just rip your face off kind of breadth numbers, which can't be ignored, but since they changed the uptick rule in 2007, they're a little distorted. So you had monster day, monster day, monster day, right? 1, 2, 3. And then Thursday and Friday we kind of retraced, pulled back. So you've got 3 incredible breadth days. My voice is a little hoarse, so I apologize. I don't know why. What the heck did I do? Your lines in the sand are pretty common sense. You got, here's the Dow, but it's better off in the other indices. You got 4 lows, which is one reason I don't love the way this rally is setting up. Because quadruple bottoms, I don't think there's a historical significance of them holding. In the short term, you do have a double bottom, and it's significant. You've got panic on both bottoms. You have an island reversal on the second bottom. A lot of good things in the short term, and I think this double bottom probably targets to 17.5 or so up here, which would be a phenomenal rally. I said this, as you know, on my blog. I wrote it the day we bottom. This is a bottom, and we're going higher. It'd be a phenomenal rally, but it really wouldn't change the character of the last 9 months. So I'd like to see the major indices close above their February highs, which the Dow did. Nobody else did yet. And that would really at least kind of solidify the low. Not that I would add to buying because I already went all in anyway, but I'd feel a little more comfortable that this rally could get us up to maybe 17.5 on the Dow over a period of months, maybe by, I don't know, May or June, and then see what happens there. A lot of what we cover, I'll bomb through things quickly tonight because a lot of the action this week, rising tide lifted all boats. A lot of things look similar, so I'm not going to spend time on when so many patterns and behavior look like everything else. Okay. Here's a Dow, definitely the strongest just on a chart in that it already closed above its February highs. That's a good thing. And now we're in pullback mode right now. S&P has not closed above the February highs, but pulled back a little bit. They look very similar. This also targets up to like 2070 or 207 on the SPY, somewhere up in here. And again, time-wise, I'd be thinking towards the spring. Mid caps looks similarly, has not closed above the February highs yet, and they target up here as well. Small caps, which have gotten absolutely obliterated, are starting to lead now. I'm certainly not surprised because I own them, but I own them down here too. They're the most beaten down, therefore they should bounce the most right now. But they've got a ways to go to close above their February highs, and they too would target up somewhere in here. And the Qs, the weakest double bottom, this is not a double bottom, so that clearly is the weakest. The bounce has been fine but not great. And I think almost every ETF will show you a really nice positive divergence with stochastics. And where's MACD? And MAC. So you have positive divergences probably in every major index with MACD and the stochastic. So you got option traders are still negative. You have all the ingredients in place for a good rally. All right. Europe, double bottom in place. Finally, which I said last week, I was indifferent. Got a double bottom in place. Do I want to step out in Europe yet? No, but I'm just mentioning it's there. Emerging markets look interesting because this second low is so much higher than the first low. So I am really keen to see if after 5 years, is this the time where emerging markets really begin to step up? Question mark. I don't think so, but I certainly take a wait and see and watch it. Let me look at any questions or comments. Love everyone's political comments. That's one thing. You want to get a group moving, just start talking politics, and you get all kinds of comments. I don't think so. I know everyone has this view that the Dems will just executive order all these high taxes. clearly that's against the law. It's against the Constitution. Um, and then it would go to the Supreme Court. I know a lot of people don't trust that court anymore, but even then, it'd be almost impossible to believe they could executive order anything on the tax front. It's, I mean, illegal beyond anyone's comments. It'd be unprecedented. Not to mention the fact that clearly, Congress is not going to pass this stuff. Let's see. EEM there's something looking the same around late August and September. You're talking about, I think this is what you're talking about, Johanna, right here. Yeah, it did have this. I said, so you had a low here and a higher low here, much higher low here. 5 years, one of these ridiculous bottoms in EEM is going to turn. And maybe it's not going to turn for another 2 years, but every time we get the setup, you gotta watch it, because the one time you dismiss it out of hand is the time where it goes. When EEM goes, this thing's going to go to 100. So, and not in a period of a year, but it's going to go to 100 in this amazing move. I don't know when that move starts, but it's been disastrous since early 11. So you got 5 years of emerging space being awful. When it finally turns, you're going to get a nice 5 or 10 year run of monstrous returns. Let's see what else. If this rally fails in early March, what are the chances the next decline takes out the market's recent lows and we go below the 15 low? Burwell. If this rally fails, so let's take a look. If this rally fails, it probably fails now, meaning in the next 2 weeks. I mean, we should not pull back a ton. If this rally fails, I think not only do we go below these lows, but I forgot whom I said it to, but you could go down, 1,500 to 2,000 Dow points pretty quickly if this rally fails. If this rally fails, and right now the evidence says the rally's not going to fail. So in my mind, what would I like to see? I'd like to see this rally put in a massive short squeeze, get a big move up. It'd be nice to get a 10% move here, up into here, 8%, whatever we get, and then set up another decline that holds well above these lows, and then you can have a much, much, much better rally. But that's really putting the cart before the horse. And my voice stinks. Let's see. In 1933, yes, Roosevelt did make it illegal to own gold. And the difference, I don't want to say this time is different, because anytime you say that, you're proven wrong. But I think the circumstances were a lot different regarding gold back then than just taxing the rich would be today. But I understand this is the reason why Trump is where he is. Everyone's angry, and nobody trusts any officials, whether elected or appointed. That's how someone like Trump and Sanders can get where they are, because as the country as a whole has no trust and faith in what the heck's going on, which is sad. But as I spoke with a group today, I said, that's democracy. We ebb and flow with strong confidence in our government and no confidence. If we lose confidence in the government, you'll see the dollar really begin to unravel, and I don't think that happens anytime soon. I think the dollar's going much higher. But democracy's not perfect, and when it hits these bumps, it sucks. Let's see. All right, let me forge ahead. So we've covered the major indices. And now we shall go to the key sectors. Semis. Are they leading? No. They look like the NASDAQ, kind of, sort of. They're all going to have these nice divergences. So you guys who are new here, lower lows in price, higher lows in an index equals reversal. Okay? Lower lows in price, higher lows in the index. That's a divergence. Anything on the semis? No. They look like the market. Banks, which, whew, and even in the rally, the banks, it did not inspire a lot of confidence. I mean, the banks, because they were so beaten down, they should have rallied the most, and they just look like death. So I don't love the banks. Although if I had to own one, that island, this is such a classic island reversal in J.P. Morgan. I would own Morgan if I had to pick a bank, probably. Citibank, does that look good? Not really. Wells, not bad. Wells. Goldman, Waffle. Stanley, not as, oh, Morgan Stanley's interesting. Yeah. Okay, so banks don't look good. Semis look average. Consumer discretionary, bouncing nicely. A lot different than the market? No. Strong bounce in discretionary. Bottom was interesting. And this, so most of these, if you dial it down to a 65-minute chart, you'll realize you've got beautiful coils, maybe they're bull flags, excuse me, and you double the size of the rally to lead to the ultimate place, which gets these up towards my targets. The discretionary looks good. And the last one is trannies, which I said last week. You got to be careful just calling this, I said this a couple weeks ago, look like a bear flag, especially on the weekly chart. You know, this looked like a beautiful bear flag until the bulls said, I don't think so, adios. So what do I think? Any change? No, I mean, trannies have been leading since the January bottom. They put in a much higher low, barely discernible on the chart, very overbought. If the trannies can resist going down here, it'll be the first time in more than a year where there's some leadership evolving, emerging, behaving in the transports. That's important. Let's go on to software. Again, looks like a lot of other things, except this low is so much lower than this low. Clearly on the weak side, but like the rest, you've got a nice little consolidation coil bull flag. Telecom, which has been one of the groups I've liked, you know, right there trying to close above the February highs, a much higher low. They've been a leader. I always talk about, you know, AT&T looks beautiful, and it has, so does Verizon, which, for full disclosure, clients own these. Let's see. Diversified financials, a little stronger than the banks, but clearly nothing you want to run out and buy. Retailers, look at this. They've been dogs for a long time, right? They've been absolute dogs. In November, they closed at their lowest levels in a while, and they collapsed again. Look what you have in the retailers. They're above their February high already. Ding, ding, ding. Time to look for retailers. Home builders look like the market, only weaker. Industrials, guess what? Ding, ding, ding. Much higher low. I talked about it last week. And higher than the February peak. So you've got retailers, you've got industrials leading, materials, same thing. So 3 leadership groups emerging right now. Energy, kind of market performers, much higher low, but not really taking off yet. This is a big week for energy to close above the February peak. It's got to happen now, I think. Uh, let's see what else we got. We got, what the heck was that? Healthcare. Anything beautiful or horrible? Not really. Biotech. Still looks like crap. They could run 10% here, but I think it needs more time. REITs. I'm killing myself because I got stupid. I saw REITs down here at the low, and I said I gotta buy some REITs. And I got pennied out 2 days in a row, and then it went without me, so it kind of bothers me. But would I buy them up here? I would not. Utilities, which I do own a small position in. I said last week I bought it here. Nice day on Thursday. Consolidate on Friday. Utilities are supposed to go to new highs this week, next week. They still look fine. Consumer staples, another leadership group, which, as you know, I've owned feels like forever, and I bought a little more on Friday. They're supposed to break out in the next 2 weeks. So you got some okay leadership in industrials and materials and retailers, and telecom. Defensive stuff like staples and utilities, not so wonderful. Oh, and transports as well. Internet. Because they got obliterated, there we go. Definitely not a double bottom, but a divergence. I mean, internet's, in my view, and I own a big piece of this, FYI, I think they're a definite sell the rally. So if we can get another leg higher in the internet group, I think that's a definite sell. Airlines, they look all right here. I think they're worth a shot. Another kind of leadership group. Solar, nothing. Absolutely nothing in solar. It's kind of disastrous. If someone email this, let's see. First solar, nothing there. And gold remains, probably the strongest group on the board. Would I buy it up here? I can't. I cannot buy it up here. Now it's getting really volatile and sloppy. Could it go much higher? Yes. Could it correct all the way back down? Yes. I don't have a strong conviction in gold. All right, let me pause, look at any questions that we have. Very few. Good. XLU May, we covered. Brian, do I like the home builders? I don't. That was a 2015 forecast pick. That did not end up very well, as you can see. But down here, would I run to buy them? I wouldn't. They look like a market performer. Could they rally another 10, 15%? Absolutely. Absolutely. If the market's solid, these things should be solid plus because they're more leveraged. But do I love them? I don't. Okay. So let's do gold. Now, gold, I mentioned did I mention it last week? I think I mentioned it last week. This day in gold, I did mention this last week. So in the GLD, look at the volume here, blow off, and then we had the number of shares outstanding blew off. So that, gold looks like a blow off to me, that it should peak and go down. It put in a decent week last week. It didn't really, bears couldn't make any headway. But I think gold, I wouldn't buy it up here. I'd look for, if I was buying it, a pullback to the 1100 level. And once again, I don't think the ultimate low is in gold. I could see gold rallying $100 or $200 this year, and then maybe we get one more shot down before we start heading to my $2,500 target. Johanna asked about silver. similar, a little weaker. But if you really want to do the relative strength line, Johanna, and gold's been much stronger. Here's every juncture, gold's been stronger than silver. We did gold, we did silver, we did the dollar. Here's the dollar. I still don't think it's ready yet. I think we got more months ahead of us to consolidate, possibly down to the 93 and change level. But this, I absolutely do not believe this is the ultimate peak in the dollar. I think the dollar's got at least another 20, 30% higher to go. Euro's in a nice spot right here on the long side, although longer term I think the euro's going to get cracked another 25, 40%. But on a trading basis, this is a good spot for the euro right here. If it holds here, you could get a run back 113, 114, and if it doesn't hold here, your risk is really small. Yen, which I still own in my macro strategy, but I hate it long term. It's hanging in really nicely, confounding the Bank of Japan among other people. So I would not just immediately dismiss it. There's nothing that's changed in my belief that the yen's going to go down another 50%. But this is the move that got me. I was scratching my head. When they devalued here, they went to negative interest rates, and the market just thumbed its nose and took off to the upside. Japanese stock market has been wild. As you know, those of you guys who know me, I love this action down here. You have an island reversal, and you got a bullish engulfing. But Thursday's action was ugly. Let's see what did the yen, the euro, the loonie, which somebody said, it's just tracking oil. Not really. But I could see why you'd say that. Their intermediate term correlation is strong with oil, not in the short term. What do I think about the loonie up here? I think we relieved a huge oversold condition, and now we're kind of at equilibrium for now. We did gold, we did silver, we did dollar, we did currencies, we didn't do oil. Here's oil. So for those of you who believe that oil and the loonie are hand in hand, here's the loonie. Really very strong short term, but oil is clearly different. I don't like the two red candles at the lows, which makes me believe we have not seen the bottom. But if we begin to close, mid-30s, I'll have a different take on it. I'd like to see oil rally, fail, put one more final low in just below these lows, and then I think you could take off on a better rally. Let's see, oil, copper. And almost all the commodities that we're covering, not really tropicals and the grains, but oils and copper and gold, smart money has been locked and loaded for a long time and wrong. So for me, anyway, it makes it harder, because I usually rely on that data to help me form an opinion. Here's copper. I have absolutely no opinion on copper. None whatsoever. Natty gas, really disappointed. Last couple of weeks, straight down move. I argued that this was action that normally happens at the beginning of a bull market. However, this kind of action is anything but bull market action. So you think natty gas may come down and retest these lows this week or next week. But very disappointed for the bulls that they could not hold on. And not only that, they're just totally giving it up down here. Bonds. TLT, which I had sold kind of nicely, and I just bought it back half a position down here, which I'm okay with. See what happens. 10-year yield looks like it wants to come back down, maybe retest these lows, which would make TLT go up. Let's see. Junk bonds. Here's, oh, this is not it. Hold on a minute. There we go. So junk bonds have once again rallied sharply off the bottom. I have not bought them yet, but as I've said for weeks and weeks and months, I do believe this year we see a major low in junk bonds and one where you can own them for quarters, if not more than a year, and make a phenomenal return without a lot of risk. Anything to do yet? I don't think so. Let's see. JNK, kind of the same thing. We've seen this picture before. It looks strong right now. It looks strong here too. So we'll take a wait and see. But another opportunity in junk bonds here. We'll see if they can fend off the bears. AD line, nice run off the bottom. I want to see what happens when it closes above the February peak. Common stock AD line, same thing. Nothing exciting there. Aussie dollar for somebody. Here's the Aussie dollar. To me, it does not look like the loonie. Remember, here's the loonie. It was in a big collapse and a big rally. Aussie dollar really went sideways, fell to new lows, and then bounced back. I don't really have an opinion. I think smart money is definitely on the long side of this one, but I don't really have a strong opinion here. And finally, the ags and softs and grains. There's not a lot of action. Wheat, anything? No opinion in wheat. Corn, anything? Not really. Beans, nothing. And would I be surprised if they ticked a little higher? No, but it doesn't look like they're launching any kind of big bull run. Sugar, which we've loved to the short side for a while, fell out of bed. Again, I love this because we talked about it right up in here. Sugar still looks like it's going down. Cotton looks sloppy. I don't have an opinion on cotton down here. Coffee just goes sideways forever, and it's done nothing different last week, so we'll sit and wait on that one. And cocoa continues to digest the big decline. And as you can see, you have huge range days, both green and red. And that's the traders groping for a low, or the commodity groping for a low, but it's very atypical so far the way this is shaking out. Let's see what else we got. Kevin, would I hold the miners? Well, I don't own them, but if I owned them here, I would certainly put a stop in, because when they reverse, it will be sharp. So I would certainly, whether it's a mental stop or a day stop or a day trailing stop, just don't let much of this rally get away from you, in my view. Wait, JN, what is the call up for % of an ETF bullish? JN, I don't understand the question. Sorry. What is the call up for % of an ETF bullish? For example, XLE. I totally don't understand. I apologize. But if you can rephrase it, I'll try to address it before we end. Anything? Gavin, on the weekly chart of coffee, I'll pull up coffee again. And again, this is how commodities bottom. Here's coffee. They just bore you to death. So you asked about divergences. Every successive lower low, there's been kind of a higher high, a higher low in stochastic. But it hasn't led to anything. They're just going to bore you to death. This is now a year of essentially going sideways with a slightly lower bias. Um, I would not try to get in front of this. I think you got to wait and buy on the run, which is a little more difficult, but or else this is just dead money. Mike, what is weighting down the banks? Is it persistently? Yeah, well, Mike, two things. One is the banks are hoping for 4 rate hikes this year, and that would get them their net interest margin to increase, so better earnings. That ain't happening. And two, you have the loans to metals, mining, and energy companies, which you're going to see some defaults and some workouts. So it's a double-edged sword that's hurting the banks. Let's see, what else? Oh, I did it last week. Yeah, JN, what did you punch in for charts to get percent of stocks bullish? Oh, no, JN, what I did was, no, I did it, the shares outstanding is what I did. So like an XLE, it's $XLE.SO, shares outstanding. XLE has, let's dial this down a little bit. So right now, XLE has an enormous amount of shares outstanding. I don't know if I didn't do the work on this one. So, and that's been the case. It's been growing ever since late 13. That's it. So, growing since late 13, and this didn't peak until 14. I don't know if this is actually a leading indicator, JN, for XLE, or it's coincident, or just coincidental, excuse me, that number of shares outstanding keeps growing and the ETF keeps collapsing. I think that's what you're asking for, right? The dollar sign and then .SO. If not, let me know. Other questions, comments, concerns? I definitely need to shave. Jesse, I covered the grains. There was nothing in any of the grains. It was just boring. What else we got? What are the futures? Futures up 35 bips. Nothing. Really high trend on Friday with a nothing market. Is EWZ in line with EEM's performance? Let's find out from Mike. Brazil. So, wow. So, let me open this up a little bit. So, Brazil remains battered and bruised. Looks like death. Much weaker than EEM. But that's a lot. That's commodity based. What else? Do you think specific earnings this week could have an impact on the overall market? I don't. I think the bellwether companies have reported, and I don't think you're going to have any kind of real earnings outliers to drive anything. Any other questions, comments, concerns? My opinion on the market is I think the bulls hang in. Like I said last week, I said it should be a big week for the bulls last week. The bulls should hang in. They don't have to make headway this week. They just have to fight off the bears making any kind of meaningful progress on the downside. Olympics for EWZ, boy, that's a disaster in itself, the Brazilian Olympics right now. So what they were hoping for isn't happening. It's been a disaster down there with the Olympics. It's like every Olympics, it seems like it's a disaster for the country, for Russia, for China, for Brazil. Uh, Jay, if the rally does fail, when would I get concerned it's failing? Um, we start closing below a couple of these big up days from last week. I don't think the Bears are supposed to make any meaningful progress. So I guess we could give back one day, but we start closing below these 2 days, and it's to me it'll be sayonara pretty quickly for the Bulls. All right, anything else? Does the market really sell off hard when many companies report earnings? No. I forgot who did the study, but the study debunked people's thinking that when earnings season happens, you get a lot of reaction. You don't. Earnings season is no more volatile than any other part of the market, any other seasonal event. All right, last call, and then I am going to call Tiny and pester him for a while. Okay, that's it. Hey, Scott. Um, Scott, well, I don't think I have TV this week. I'm in all week. For those of you guys who live in Connecticut, I did a nice tax, which wasn't boring. At least I don't think it was boring. I did a tax segment last week on Fox in Connecticut. That was kind of fun. Thanks, Johanna. All right, guys. Everybody have a good week. And God willing, we'll be back next Sunday night. Take care. Good night. Tiny, I am done.